Good morning, students. This is Mr. Muibi. I'm here to teach you financial accounting. The topic we are going to look at this morning is business purchase accounting. So, but before I proceed, I would like us to go to the previous lesson. In our previous lesson, we discussed about acquisition account. And when we are talking about acquisition account, this is the purchase of all or a person of a corporate asset or target company. So this is to acquire or merge one or two companies together. We discussed about that in our previous lesson. And we also discussed about the types of acquisition accounting, whereby we have conglomerate merger or acquisition. We also look at the concentric acquisition. We also look at horizontal and vertical acquisition or merger. We also discuss about the accounting procedure for preparing the acquisition accounting. We prepare where we are given the two balance sheet, and we also discuss about the combined or consolidated balance sheet. So that is what we discussed last week, and I would like to introduce another new topic to you this morning. So that is a purchase of business account. Then let me introduce the lesson objective. At the end of the lesson, students should be able to define purchase of business, explain purchase of business agreement, explain some terminology used in business purchase, and lastly, prepare business purchase account. So let us look at what business purchase account is all about. Is the process of acquisition of old business by a company. So simply means is you can acquire the old business is possible. Then the promoter can also acquire a business and sell this business to another company at a profit. So it's possible. And this is what is called a going concern business. It's a going concern business. It's a business that continues to exist for a long period of time. So this purchase may be a sole proprietor, it may be a partnership firm, and it also can be a limited liability company, and can also be a limited liability company. Any one out of these business organizations, they are going to have the same accounting procedure. So they are going to have the same accounting procedure, whether it's a sole proprietor, sole proprietorship, partnership business, or limited liability company. So it's the same thing. Let us look at purchase of business agreement. This is what we call a contract, and the contract must come between the buyer and the seller. So so that the seller will transfer the ownership of the business to the buyer. So buyer will now be the owner of the business if eventually the seller happens to sell the business to the buyer. And this is also dictate the right and responsibility of each partner in terms of managing and operating a business. And this business purchase agreement is also known as a business transfer agreement or sales of business agreement. So there are some terminology used in business purchase. We have the goodwill, and this goodwill, before we come, is an intangible asset that arise when a buyer acquires an existing business. So if a buyer, if the buyer acquires an existing business, it's also known as goodwill, or is what we can also call goodwill a reputation in any business organization. So if you want to calculate the goodwill, that will be the purchase consideration. You subtract it from the net value of a asset, and how will you get the net value of asset? That will be the total of fixed asset and and the current asset. You add them together, that will give us the current. That will give us the total asset. So you subtract them from the current liability. At the end of the day, we get net value of asset. Then subtract it, you are going to subtract it from the purchase price, or you call it purchase consideration. So this goodwill in accounting is also called intangible asset. Intangible asset. So again, we also have the capital reserve, and this capital reserve, that means net asset must be more than the purchase price or purchase consideration. It's a reserve which being created out of the profit. So that is the reserve. Instead of using that profit, they will also use it to create or to ensure that they invest that particular profit back into the business. So it's as simple as the net value of asset. Net value of asset is more than the purchase price, or we call it purchase consideration. So that is for the capital reserve. Let us look at the purchase consideration we have been talking about of purchase price. That is the amount payable by the buyer. The amount that being paid by the buyer to, or the purchaser to the vendor. We call that vendor the seller. So vendor is the seller for the sale of asset in terms of agreement. So simply means there must be an agreement between the two parties. Who are the two parties? The buyer and the seller. So they come together, they agree on business terms, then the buyer become the owner of the business, why the seller is the vendor. And this purchase consideration is also known as a purchase price. And it may be in form, that purchase price may be in form of cash, it may be in form of shares, and it may be in form of any other asset or property. It's based on the agreement between the both parties, or between the both company. So that's an agreement between the. So we also have the vendor. As I told you the other time, vendor is a company, or it's a seller, or you can say that it's a company or a person that sells goods or services to another company or firm. So the vendor is also known as supplier. A supplier, a manufacturer that turns raw material into finished goods, is a vendor to retailer. So it's a vendor to the retailers or to the wholesalers. Then again, let us look at the accounting procedure, or one of the examples I'm going to illustrate here is on the screen here. We have the balance sheet of Barika. Barika are taking over the business of Lanka on 31st January 2010. Based on their last agreement, we have the balance sheet here. We have the fixed assets, premises of 100,000. We have the fixtures of 45,000 and motor van of 55,000. That's for the fixed asset. We also have the current asset, debtors 15,000, stock. Stock is 5,000, while the bank is 30,000 naira. So this is the asset side. Let us look at the liability side. Mind you that this is the business of Barika. Then the this is the business balance sheet of Lanka, and Barika want to take over this business so that it become the Barika company. So this is their balance sheet. We have the current liabilities there. We have the creditors 10,000. We have the acquires of creditors 60,000 and acquired is 10,000 naira. So by the time we subtract it from 250,000 naira, we are going to get the capital of 180,000 naira. So that is then the next one. We're also giving additional information here. The purchase consideration to be 200,000 naira. That is the amount of the company that the buyer purchased the company. So the asset in this type of account, if then the asset need to be revalued. We have the premises, fixtures, motor van, debtors, and stocks. So all these need to be revalued so that there will be a. Then let us look at now. The first one is to prepare the journal entries. Then the asset will be at the debit side in the journal, while the liability will be transferred to the credit side of the journal entries. So, please, my students, what you are going to do here is you are not going to make use of the previous balance sheet again. You are going to use the one that we are having additional information. That is all the assets that you are going to use, except if you are not given in additional information. So we have premises of 140,000, features of 40,000, then motor fund 57,000, debtors is 13,000, stock 10,000. Then our goodwill is also 10,000 naira. So how do we calculate the goodwill? That means we are going to add the fixed asset and current asset together. Then that will give us the total asset. Then subtract it from the current liabilities. That will give us the net value of asset. Then the purchase price that we are given, that is 200,000. By the time we add all this together, that will give us 180,000 naira. So subtract it from 200,000, and that means you are going to have goodwill of 10,000 naira. So, and then the liability will be at the credit side of the journal entries. That is the creditors 60,000, and then we have acquire of 10,000 naira. So, then the purchase consideration, or we call it purchase price, that is 200,000. Then that will be what? Asset and liability taken over by the buyer. So then we have the purchase price of 200,000 naira. Then vendor account, you have to credit the vendor account, and then you also debit the vendor account. Then you credit the bank account. So the next one is to look at how to calculate or how to determine the goodwill account. Goodwill account. I've told you the other time that you are going to subtract the purchase price, or you call it purchase consideration, from the net sales, net assets. Sorry, net asset. And how do we get the net asset? That would be total assets subtracted from the liability taken over. So let us look at the asset taken over. Asset taken over we have on the screen here is 140,000. The features 40,000. Then the motor fund is 57,000. Debtor 30,000. Stock we have 10,000. Then then we come to the liability side. That's a creditor 60,000 naira, acquire 100,000. Then we also have the purchase price. That's 200,000 naira. So the total asset taken over here is 190. Subtract it from 200,000. So we have the balance of 10,000. That balance of 10,000 is our goodwill. But in a case where the assets, net asset is more than the purchase consideration, that would be what? That would be capital reserve. In case you will get capital reserve if the net asset is more than the purchase price, that would be net asset. So if you don't want to make use of the other one I show you, then you can calculate this, how to calculate goodwill as well. You can calculate it if you don't want to prepare the business purchase account. Then you can do can also make use of this method. We have the asset 140,000, premise features 40,000, motor vans 57. We have the debtors 13 and stock. Stock is 10,000. So we have 260,000. When you sum everything together, you get 260,000 there. Then less liability, and the liability we are having is creditors and acquire. The creditors amount is 60,000 there. The acquire amount is 10,000. That will be 70,000 there. Then subtract it from 260,000. That will give us 190,000. Then we minus it from the purchase price, which is 200,000. At the end of the day, you are going to arrive at the 10,000 there. So whichever any method you use, you are still going to arrive at the same answer. So then the next one is the last one here, is to look at how our balance sheet will look like. So the purchase price, mind you that we are given a capital of 180,000 there in the question. So we are not going to use it again. So we are going to use the purchase price. That purchase price will represent our capital in the last or in the balance sheet, in this balance sheet. So we have the creditor under the current liability, 60,000 naira, then acquire is 10,000 naira. When you add 10,000 and 60,000 together, you are going to get 70,000. So let us add it with 70,000. You get 270,000 naira for the liability side. Then let us look at the asset side, whereby this asset classified into two. We have the fixed asset and the current asset. Under the fixed asset, we have premises of 150, fixtures of 40,000 naira. Then motor van is 57,000 naira. Goodwill is 10,000. You sum everything together, you are going to get 237,000 naira. So that's for the fixed asset. Let us look at the current asset. Under the current asset, we have debtors, 30,000 naira. Stock, 10,000. Then you add 10,000 and 30,000. That will give you the 23,000 naira. Let us add 23,000 naira and 237,000 naira. That will give us 270,000 naira. You can see both sides, both the liability side and the asset side are equal, and this is how you can get the best in calculating the purchase of business accounting. So, my student, the best way you can know this subject better is to get the textbook on this subject, and the recommended textbook is the Simplified and Amplifier Bookkeeping and Accounting by Femi Lunge. So, and go to the school website. You see the more assignment on this topic. God bless you. God bless, and stay away from this disease. God will be with each and every one of us. See you next time. God bless you.